Hello, everyone. Thanks for joining me on this Saturday morning, and welcome to this Specialist Trading educational presentation. Now, today I want to talk to you about pinpointing profitable exits in advance. This is a great new tool that we have available only on the PTS Primo Charting platform, and it's really helping a lot of our students, not only people that have been just started to trade, but also people who have been trading for a long time. And the beauty about what we teach you in all of our courses is that you fully understand why these are being generated in the first place, and you understand the value of them. So not only are they just automatically here for you, but you understand the basis behind why they're being displayed in the first place. Now, here's what I'm going to share with you today. For example, look at this chart here in NCLH. This was an actual buy signal given by one of our strategies in early June. Now, with what I'm going to be teaching you today, you would have actually had an exit generated right up here, which you could have decided even before you took the trade if you wanted to get out there. So the beauty of these exit levels is that oftentimes they are reached sooner than later. Now, where someone could look at this who hasn't been trading for a while, who would say, well, gosh, Steve, I'm kind of greedy. I got out here and look at it, went up and closed towards the high of the day. How do I know it's not going to keep going and I got out too soon? Well, that's true. No one actually knows that in advance. But many times with these exit levels, it will get you out at the opportune place prior to the trend changing. So looking back in hindsight, you'll be able to say, wow, I'm glad I got out at that point rather than staying in and getting a little bit too greedy, because this is the opportune place to exit. You could have gotten a nice 7-point gain in just 3 days before. This gain would have turned into a loss. And we all know that the worst feeling in the world is having something that was a potential winner in our favor, and then we hold on too long, and then that winner turns out not only just a break-even point, but then it actually turns into a loss. So I'm going to share with you all of the different rules and requirements that are designed to generate these exit levels. But once again, these are automatically generated on our platform as well. So we not only teach you what is behind these auto-generated exits, we also give you the option to use them automatically. So this is going to be a great educational presentation. Thanks for joining us on this Saturday. Welcome. My name is Steven Primo. If you're new to my webinars, we're a little bit different from other webinars you may have seen in the past, in that our only goal is simply to educate you. I know a lot of webinars you go to or blogs you read, they're always designed to tell you what they think the market's going to do, or they have a prediction of where we're going, or what particular stock is going to do, if it's going to bottom out or top out, or the perfect time frame, what's the perfect chart you should be looking at, or they tell you, what they think the interest rates are going to be, or this blog tells you about what the next jobless claim numbers are going to be. Well, we don't believe in any of that. And the reason why I can say that is that I've been trading for 43 years. And trust me, all of those things that you're relying and depending upon, I relied and depended upon 43 years ago. And they didn't work or help me then. So why would I teach or try to tell you that these are the things you should be focusing on? I was lucky enough when I first started trading, I struggled tremendously, probably like a lot of you are, but I was lucky enough to have some mentors that really basically told me, they said, Steve, listen, just focus on the things that work, that have high levels of consistency, and the things that don't work or don't show any consistency, strip away. In other words, they used to call those things useless noise. So it was difficult for me in the beginning to actually grasp that concept. In fact, I didn't want to. I was a specialist on the floor of the Pacific Stock Exchange. That's where I first started trading. I was a floor trader. And I had to be in charge of making markets in roughly about 60 stocks. So I had to know all the earnings estimates. I had to know, what the jobless claims were going to be that week. I listened to all the pundits, and I listened to all these things that I was taught to listen to. And guess what? They didn't work. So in my 43 years of trading and experience, my goal is simply to educate you so that you can focus on the things that work and the things that don't. Trust me, we have over 115 students around the world, and students in virtually every state in the United States. They've all gotten back to us with testimonials, some saying this is the very first time they've been a consistent trader once they started stripping away these things that really hold no levels of consistency and just focus on what we teach them. And that's one thing, to listen to what the market is saying and not anything else. So that's our goal, and that's what you'll see me do today in teaching you how to apply these exit levels. But before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis where you don't have to wait each week for me to give these webinars, you can go to our Twitter page. There's our handle right there. You may want to copy that down at SPCLSTTRADG. Every day I post different educational information from signals our strategies have generated to little bits of financial wisdom. So there's lots of great free education on our Twitter page. Feel free to follow us on Twitter. Now remember, as I said, we are different from other webinars you may have attended. If you've come here today thinking that I'm going to tell you what I think the market's going to do next week, or you've come here today thinking I have the best pick for the best stock you should buy or the best market time frame you should trade, you've really come to the wrong place, because really that is entirely against our philosophy. Our philosophy as educators is simply to teach you how to trade. You see, a good mentor doesn't trade for you. He doesn't tell you what to buy. He doesn't tell you what to sell. He doesn't tell you where to buy or where to sell. He simply teaches you these things so that you can decide for yourself. We often tell our students, the one question you should never ask is someone else, what do you think of the market? Because when you ask that question, think of what you're saying. You're basically saying to the markets, I don't know what to do. I'm not educated enough. I haven't been trading long enough. I don't have the the experience or the knowledge. So I'll let you decide for me how to trade. I mean, that's really a recipe for a disaster. Think of any other career, any other endeavor. Think of an airline pilot in the middle of the flight going on the speaker system and asking the passengers, how do you think I should fly this? How do you think I should land this? Think of a brain surgeon in the middle of an operation asking someone in the room, how do you think I should operate? How do you think I should, operate on this patient? They would never do that, right? Because why? Because they're professionals. They know going in prior to the operation, prior to flying the plane, what they should do in any circumstance. That is the same way you should be trading. You should never go to, in my opinion, to a blog or watch the people on TV or wait with bated breath for the earnings, because those things really don't apply. You should have a plan already in place, knowing where you're getting in, knowing where you're getting out, and knowing where you're protecting yourself if you're wrong. And that's it. I've often said, if you are trading correctly, it's very similar to fishing. You simply get in the boat, if you're on a boat, cast your line, and then you wait. And that's the same way trading is. If you're doing it correctly, it's almost very boring because you're just following your rules. The only difference is everyone should have their own way and means in which to trade. You should never mimic someone else because, once again, that's what our entire industry is based off. And why do 80 to 85% of all traders fail? Because that concept doesn't work. You've got to find your own way. The good news is we provide that service. We provide you with things that have stood the test of time so that you can find your own way. We work with you and we teach you, but ultimately you are in charge of your own trading destiny. Not us, not some earnings report, not some prediction on what the market's going to do. It's you who decides your own trading destiny. Okay, so that's our goal, to teach you how to trade with the specialist edge. This is the same edge I was taught some 4 decades ago and what has sustained me now for 4 decades, and hopefully it will do the same for you. All right, now, since this is going to be conducted like a class, I want you to ask me as many questions as possible, but once again, we're a little bit different. I don't like to stop at every slide to answer a question. We'll be here far too long. So if you have a question, please wait till the end of class to ask them. I promise I will answer each and every one of them. The only question I will not answer is the most popular one, or I should say the only question I will answer is the most popular one, and that is this going to be recorded? Yes, it is. We will send each and every one of you a link to this recording so you can watch it over and over again at your own leisure, okay? All right, with that stated, let's begin today's educational class. And what we're going to be talking about are range extension levels. Now, some of you may already know what they are. I see we have a good crowd here today. Many of you are already students of mine. But for those of you who aren't familiar, let's give you a brief refresher course or a brief explanation of what range extension levels are. Here is the standard definition. Measure the range of the setup bar. Now, I know a lot of you may right off the bat be confused, say, I don't even have any idea what a setup bar is. Think of any strategy. I don't care if it's one of mine, one of yours. It could be based on fundamental news. It could be based off of indicators. It could be based off the full moon. I really don't care. But every time all the rules of whatever your method is, whenever they come all into play, whenever all the requirements have been met, that's usually connected to a specific bar. It could be a daily bar of a stock. It could be a weekly bar of Bitcoin. It could be a 5-minute bar of the E-mini. But when everything comes into play, that's your setup bar. That's the bar that determines, okay, I'm going to buy now or I'm going to sell now. We call that the setup bar, or it's called the signal bar, same thing. So what you want to do, let's say you're following the news. When the earnings comes out and you say, hey, those are good earnings, I'm going to buy tomorrow. Well, the day the earnings came out, the day you decided that there was a signal, that's your setup bar, all right? So what you want to do is measure the range of that. That's not from open to close. That's the extreme high to the extreme low of that bar, okay? So let's say the high of the bar, not where it closed, but the high is 50 and the low is 40. Well, then the range is 10 points, okay? All right, so what you want to do is measure the range of that setup bar. Now, subtracting that range to either the top or the bottom of that setup bar equals a 200% exit level. Now, adding or subtracting that range again will equal a 300% exit level, and so on. We can go to 400, 500, 600. It's up to you, but we usually stop at 400. Now, let me share with you on a lot of visual explanation so you don't get too sidetracked here and think this is too complicated. All right, let's say this is your setup bar, all right, where you have a buy signal. Let's say it's based off of the tides of the ocean. It makes no difference, but this is the day you decide to buy, all right? So this is the setup bar. What we want to do is take the extreme high. Remember, it's not the close or the open, it's the high and the extreme low. We want to measure that. That equals 100%, okay? So let's say it's 10 points. If you're going to be buying, what you want to do is take whatever amount of points that is. In this example, let's just say it's 10. And now we add it on top. This gives you the 200% exit level. And this is where your first point of exit would be. And if you want to do that again, you would add it up here. See, it's very simple. That's why they call it range extension. We're extending the range of the initial setup bar. So these would be your 2 levels of exiting. And ultimately, you could have exited here, or you could have exited here for a profit. Now, this works the same way to the downside. Let's say this is your sell signal. Let's say the earnings come out, you're following earnings, and they're terrible. And you say to yourself, wow, I have got to sell this. All right, that's fine. We're not talking about strategies today. We're only talking about exits. So what you want to do, once again, is measure the top, not the open or close, but the top of that bar and the bottom. Let's say it's 5 points, okay? That equals 100%. So since we're selling now we want to subtract that same amount of points from the low, and that gives us our 200% exit level. We subtract again, 300. If we wanted to keep going, we could go 400, 500, but we usually stop at 400. And there you see, you had 2 points of exiting that would have generated a nice profit in both of those points. All right, so let's share with you some exit examples. And I'm first going to show you some older charts just so that you understand for educational purposes how to apply this process. And then I'll share with you some examples that happened in the last month, some in the last week, okay? All right, remember, I just shared with you and taught you the concept. This is our philosophy. We always want to teach you what our methods and techniques are based off of so that you fully understand. Nothing is a black box here. We don't want to say, just do this, don't understand what it's based off of, just do it. That's not our philosophy. We do have a couple of things that we're keeping in-house on our platform, but we always share with you how to apply them and the best way to apply them. But I would say about 80 to 85% of all the things we share and teach, we teach you what they're based off of. We teach you the rules so that you ultimately know why you are applying these things. Because remember, it's all about teaching you so that you can decide if you want to apply them or not. And this is just one of our different exit levels that we teach, or exit methods, I should say, that we teach in our courses. You have roughly about 5 or 6 more different ways to exit any trade you'd like. I'm just sharing with you one of the different methods today because it's auto-generated on our platform. All right, so let's look at this older chart in BIDU. All right, here's one of our strategy signals here. This was a buy signal. I believe this is a strategy number 4, if I'm not correct on this. So this is the signal bar, all right? So you automatically have a buy signal right here. Now, here's the way you would apply it on our platform. You would click on the strategy, which happens to be strategy number 4. In the drop-down menu, you have all these different features. Click on range extension exits, and automatically you will get the range extensions. You have 4 different levels, okay? Now, let me go into some more teaching with you and describe why we have these different levels for you and why we have 4. All right, so let's say you decide to exit at the first level. This is called a 1-to-1 risk reward. In other words, if you applied a stop just below here and you entered somewhere around here, you would basically be risking the same amount that you would be making as a profit. So it's 1-to-1. You'd make the same amount you'd be losing. All right, now a lot of day traders or intraday traders, such as myself, don't mind having a 1-to-1 risk reward because you have a lot of trades, and if you have a high percentage of winners, ultimately it'll be okay. But if you're someone who likes to trade daily bars and maybe trade once or twice a week, maybe once a month, 1-to-1 is in the long run basically going to just have you breaking even. Because if you have a method or strategy that's just maybe 50-55% correct, over time, you'll be making the same amount as you're losing. So a lot of traders would say, Steve, it's not worth it because I'm just going to basically be treading water over time, okay? So in that case, if you don't want to use that exit, you go up to exit level number 2 because you will be making basically twice what you're losing. You'll risk 1 to make 2, okay? In other words, if your stop is right here, and if you entered somewhere around here and you got out with a loss, well, let's say it worked in your favor. Well, you'd be making twice as much. So this is pretty good because in all intents and purposes, over time, you'd basically be having a nice profit. You'd be making twice the amount of what you're losing. Now, if you want to kick that even up to a higher level, you go to 1-to-3. Because you'd be risking 1 to make 3. Now you're getting to the point where professional gamblers, professional speculators like to use this because you're getting to the point now where you're making 3 times the amount of what you're willing to lose. This is the way professional gamblers trade. Professional gamblers are not like gamblers that go to Vegas or to the casinos and they just use the slot machines. Those are just they're just basically there for entertainment. You have like maybe no odds in your favor. But once you learn how to use this, risking 1 to make 3, this is where you're really starting to take charge of your money management. This is where you're really making a decision. Once again, we want you to make the decision, not us. We're giving you this information. It's up to you to decide. This is where you start to get to that point where you're starting to trade like a professional. Now, lastly, here is our last exit, which is a 1-to-4. Now you're getting to the point where if you get up to this level, you're really going to make a nice profit as opposed to how much you would be losing, okay? This is where you're getting to the point where you really have a nice strategy or a nice method to, over time, you'll be very profitable. The only trouble is how often we will get to these levels. For example, you will get to this first level a lot of the time. As you start to go out, you will see less and less chance to get up to the 4th level. Now, provided you have a really nice market environment that has a lot of volatility, and provided you have a method that is robust, sure, oftentimes it's fine to use the 3rd and 4th exit level. But if you're trading in, let's say, the summer months where we start to slow down and the energy is starting to go from a nice flowing rapid river to a pond-like, well, maybe you want to decide to use 1 or possibly 2 because you'll never get up to 4. All right, here's our only suggestion. Remember, these are just suggestions. You're in charge. You're making the decisions, not us. Our only suggestion is once you get up to level 4, we would suggest exiting the position entirely, especially if you're just starting to trade, because this is a point where the trend usually will start to change. So you don't want to be in here and say, wow, here's what the things that traders see. You get a little bit too greedy and you say, boy, why would I get out at 4? Maybe I'll get it at 5 or 6. Because oftentimes you'll see the trend change there. For example, we see that we got right up here and you say, why did I exit? I should have gone up to 5 or maybe 6. And then the trend changes and then you say, wow, I wish I would have gotten out here, okay? So this is something that you have to take into consideration. Now let's say you're shorting. We can use this exact same scenario. Here's another strategy on our platform. I believe this is strategy number 10, yes. So on our platform, once again, you click on strategy number 10, click on range extensions in the drop-down menu, and here you have the 4 range extensions. Now, the beauty of our methods is that you'll know all of this information even before you get in the trade. For example, you would know exactly, because what we teach you, where to enter, where to exit, where to place your stop before you even enter it. So you can look at the scenario and say, does this seem like it's going to work after all? Maybe I don't want to take this trade. These are the range extension. Maybe I'll look for another one. That's the beauty of it. You can decide for yourself. You're not coming up to some signal service or some chat room or some trading room and listening to some guy tell you, enter here, exit here, place your stop here. I mean, why would you do that? You've automatically taken yourself out of the game. I mean, you're once again telling the markets, I don't know what to do. You tell me what to do. I mean, we would never, a good teacher would never put you in that scenario. A good teacher wants you to apply the things he's taught you so that you can make your own decision. So all of our information is already readily available before you even trade. So you'll know the same thing. You can exit at a 1-to-1 risk-reward ratio, all right? You can always exit here, but remember, this is good to use if you're in a really tight, kind of low volatile market, because oftentimes the market is very tight. You get these whipsaws, and you'll get to the first point, and then it'll go right back the other way, all right? So you can decide to use it there the same way with a 1-to-2 risk-reward ratio. But if you have a nice volatile market, the way we've been seeing this last couple of 2 or 3 months, and there's a lot of movement, well, then you may want to go for 1-to-3 or 1-to-4. Once again, our only suggestion is, regardless if you've got a really strong market or not, we would suggest exiting your entire position at the 4 level, because I can't tell you how many times I've seen it get to the 4 level and then reverse. As we see right here, we've gotten to this 4 level, okay? Ultimately, you're in charge. You make the decision how you want to trade. That's our philosophy. Never ask anybody, what do you think I should do? Never get to that point. Study and learn and follow all of our different methods and techniques so that ultimately you're saying, you know what, I never have to ask anyone what I should do. I kind of have made my own plan. I feel very comfortable, and this is what works for me. Our philosophy is no two traders should ever trade alike. All right, so let's look at some more examples. These are more recent and seeing how this would have applied. I'll show you some different scenarios here to help you make your own decisions. All right, here's NCLH. A buy signal was generated in the beginning of June, just about a month ago. You click on and you see that we have the 4 different exits. Now let's say, one of our standard stop placements, we're not talking about stops today, but one of our standard stops is just below the setup bar, okay? Now, if you wanted to exit with 1-to-1 ratio here, you could exit really quickly. You could exit here. You could exit here, here. One of the ways we see a lot of our students is they say they have multiple exits. So let's say you have 300 shares. Well, once they get up to this point, you would sell 100 shares, and then you would sell 200 right here, or I should say another 100. So now you're out of 200, and then you could either sell the last one right here or the last one up here. Still, others use it differently. They use it as a stop placement. They would say, okay, once we get up to the first level, I will move my stop somewhere down here to unchange where I bought it, somewhere around here. And if we get up to this next level, I will move my stop up here. Now, you still haven't exited anything yet, but if the market takes you out, well, at least you will exit at this level. Now, say you get up to the 300 point, well, I'll move my stop here. You still haven't exited, but you're guaranteed to have a 1-to-2 risk reward. And then ultimately, if you get up to 4, then you'll exit everything. There's dozens of ways to trade it. There's so many ways you can exit everything at one point, or you can kind of take bits and pieces off the table, or you can use it as a stop. There are literally dozens of ways. This is meant for you to decide. Now, since we know what we're doing right here, remember, we want to exit at the 4th level, ultimately everything. And in 2 days, or I should say 3 days, that's where you made that quick 7 points. And then look what happened. This is why we always say, once we get up to this point, especially in the beginning, it's suggested to exit out of the whole entire position. Here's an example in FIVE. Okay, as we see here, we have a sell signal. We have the 4 levels automatically generated. We can decide which ones we want to take. And here's one of the beauties that happens many times. Oftentimes, you'll see a big gap happen, all right? And so you'll get an even better point of exiting. So in other words, if you had shorted somewhere around here, around 121, 120, 120 altogether, you would have, let's say, put an order to buy right here at the 4th level. Look what happened. Some news came out, and the stock opened roughly around 97. So you made a nice profit here, about 25-point gain. And this was all based off one of our strategies. We had no idea, but remember, the market tells us why it's going down. Obviously, there was some news that caused this to gap down lower. We never follow news, so there's no way we would have known what the news was. But you could have shorted this and gone short on the close if you wanted to be more aggressive and made a quick profit here on using the fourth exit level. And remember, always exit on the fourth if you can in the beginning, because look what happened. Had you not and said, well, I'm going to wait, it's going to go much lower, look what happened. You would have given back about 2/3 of your profit in the next day. Here's an Amazon example. This was coming into July, so this was just a couple of weeks ago. We had a buy, a strategy, a 4 signal, I believe. Here's our 4 exits. You can say to yourself, okay, well, if I buy here right on the close or the opening the next day, you know, I don't want to risk this much. And if I bought the calls, let's say, maybe it's too much, or maybe you could afford it. Remember, it all depends on your capital size as well. But let's say you were able to trade it. Maybe you wanted to buy 1 or 2 shares. These are your exit levels, and let's say you wanted to exit here. Well, you got up there to the 4th final place in roughly about a week or so, and then look what happened. Even though it went a little higher, you don't want to give a lot of your profit away. Remember, as I said in the opening statements, it's the worst feeling in the world to have a nice profit and then to see it fizzle away and you haven't done anything. So always take advantage of these exit levels in some capacity. Even if you didn't exit, move your stop up to one of these levels so that if it does get down there, at least you will exit with some profit. Remember, you want to always protect yourself, especially if you have a profit. You want to protect that profit. Here's an example in letter J. This was an older example going back to the last year, but as we can see here, we have a sell signal. We have our 4 examples of where we can get out at these exit ranges. Now, let's say we wanted to exit at this 4th level, okay? So we're going short roughly about 92 or so, and here's our exit plan to get out roughly about 84.5. Well, we got down there roughly in about a week. We just barely made it. I know it's hard to see, but roughly about 84.5. This went down to, I believe, about 84.45 or something like that. But you would have exited, and then you would have been out of the trade with a nice profit. Here's another example. Now, here's one I want to share with you because I don't want you to go away from this presentation thinking, well, I'll just get out at level 3 or level 4. It seems to work all the time. Not necessarily. In EXAS, we had a buy signal. We got up to the 2nd level, and then look what happened, okay? A gap down, and you would have given away everything, and if you didn't protect yourself, that nice profit turned into a loss. So even if you're not going to exit at these levels, you know, you may want to take some off the table. This is why we say beginning traders, you should always, you know, exit a little bit along the way, because that way you have some guaranteed profit. Because if you don't take care of that, sometimes this will happen, and whatever profit you had just fizzles away into nothing. Example in ALLK, okay, this is a sell signal. We click on our range extension levels, okay, it seems to be all right. We want to take this trade, and look what happened. Got us right down to that 4th level, and we could have had a nice profit there in just about 4 days. All right, let's look at INMB. This was in just, I guess, last week or so. This was on the 9th of July. We had a buy signal. This is a very inexpensive stock. I'm just sharing this with you to show that it doesn't matter if you're trading Amazon or if you're trading a very inexpensive stock like INMB. These range extensions can still be applied. Now, before you took this trade, you could say to yourself, well, is it profitable for me to take this? You can get the range extension and say, well, you know, I'm buying here roughly around 6 and I'd be exiting around 10.5, so 4.5 points. Well, that's not a lot, but remember, this is an inexpensive stock. You could have bought thousands of shares if you wanted to. So let's say you say to yourself, okay, well, it's all relative, but I'll exit everything here at 10.53. Remember, on our platform, we automatically show you what these exit points are in terms of price. So you place a limit in here. Let's say you bought 5,000 shares at roughly 6. You want to get out with a 4.5 point profit. You say, hey, that'll be pretty good. And then look what happened. In 1-2 days, you're doing okay. At this point, we gapped up. There was some news. Obviously, once again, we don't follow news, so we didn't know this was going to happen. But you could have exited right here. Why? Because if you had a limit, we had a gap up right here. So you got the opening price, which is roughly about 17.5. So you would have purchased it roughly about 6. You made 11 points roughly. And then look what happened. started to come down again. This was just last week. Here's another example, mRNA. Remember this example came out where in May that they were going to have some really good news about the vaccine, and it gapped up really well, and then look what it started to come down. Well, our strategies generated another buy signal right here at the end of May coming into June. You could have taken advantage of this. Now, I share with you this example to show that sometimes, they all don't, become profitable in 4 or 5 days. Sometimes you have to hold on. So it's up to you if you want to hold on or not. But these were the automatic exit levels based off this buy signal. Now, you could have gotten in and out quickly with 1 or 2 levels, but look what happens. We went just basically sideways for a month and a half, but ultimately it did kick in, and had you wanted to exit a portion or all of your position at 82.18, remember, you would have purchased it down here roughly about 52, 53. That's a nice, 30-point gain in about a month, and you could have exited right here. This was just last week when the news came out again, favorable news about the vaccine. This is always so funny. Traders always say, well, Steve, how do you know this stuff? Because this was all based off news about the vaccine, or even if it's news about anything else, makes no difference. News about another company in an entirely different industry. Remember, the market tells you about 90% of everything you need to know. The only trouble is we've never been taught to listen to the market. We're always taught to listen to some guy in a chat room. We're taught to listen to the earnings. We're taught to listen to some guy on TV or some guy in a webinar. Remember, I never give any predictions. I would never do that to you. A good teacher would never predict what he thinks is going to happen. He teaches you how to trade so that you can make your own decisions. So whether there's news involved or not, it really makes no difference, because there's one thing I've learned in 43 years. The market tells you what it wants to do. Okay, so if you learn how to listen to the market, it's actually a lot simpler. You don't have to sit there and go, wow, are these earnings good? One site says it's got to make this point, another site, it's got to be this level. So I've got to decide which is good and what's bad news. Someone else could say, well, Steve, I follow the institutions, and I always got to do what they do. Or someone else would say, well, I follow the individual companies, and I have to learn and see what they think. It's too complicated. It's too subjective. Everything we teach is cut and dry. It's either black or white. You buy here or you don't buy here. You sell here or you don't sell here. It's so much simpler. Here's an example in MSGS, Madison Square Garden. A sell signal was given in the first week of June. We automatically know where we want to exit. Let's say we had picked the 4th and final exit level. Well, guess what? Coming into the end of that month, we would have achieved it. We would have exited right there. And this is why we always suggest, especially in the beginning, if you're just starting to use this, you want to get out of this, because look what happened. You would have given back about half of your profit if you've not taken advantage of that. Now, here's an example in BIIB coming into June. Once again, another sell signal generated. We established the 4 exit levels. If you wanted to exit here at the 4th and final one, you would have had a very nice profit, because we gapped lower and you would have gotten the gap down. So there's no place that the stock traded here, because we gapped and opened lower. So you would have gotten filled at this price, and look what happened. See how it bounced back up? That's why you always want to take advantage of that 4th and final exit point. Now let's look at entirely different markets, because I don't want you to think this only works for stocks. I know we have a good portion of our members around the world who only trade the E-mini intraday futures, and we also have a good portion in Europe who only trade forex. So let's look at both examples. Here's one, a 15-minute chart of the E-mini. This happened just last week, July 8th. A buy signal was generated. I believe this is strategy number 4. All right, this was on a 15-minute time frame. You can do the exact same thing. Figure out where the 4 extension, range extension exits are. Now, I share this with you because remember, I know a lot of you right now are convinced that it's always going to get to the 4th level. Sometimes it doesn't. So we would suggest, if you're trading a volatile market, try to take some profit off the table before you put everything, all your eggs in one basket, because sometimes it will get only up to the 3rd level the way it did right here before it runs out of steam. That was still a nice profit. Now here's an example on a weekly chart of the Swiss franc. All right, I'm showing you 2 different markets, 2 different time frames. Doesn't have to be just daily bars of stocks. Here's a weekly chart of the Swiss franc. I believe a strategy number 5 sell signal right here. Here are the 4 different exit points. And if you really believe strongly, you could have picked the 4th and final one, which got filled here in March. and that would have been a nice profit on a weekly Swiss franc, okay, before you gave away all your profit. This is once again why we say you should get out of your entire position at the 4th level. Okay, so let's recap. Remember, range extensions are very simple. It's not complicated at all. Whatever your strategy or system is, it makes no difference. Every trading method has a setup bar or a signal bar. That's where all the rules come into play, where all the requirements are met on a certain bar. All right, all you want to do is measure the range from top to bottom, and adding or subtracting that range to the top or the bottom of this setup bar equals a 200% exit level. So you can do this on your own. You don't need us to do this. Adding or subtracting that range again will equal 300 and so forth, and 400, 500, 600. We always only go up to the 400 level. So ask yourself, as we conclude here, do you think this exit tool can help your trading for the remainder of 2020? Well, based off the resounding number of testimonials we have from our students around the world, I think it could help you tremendously. So here's our special offer for all of you taking time out of your Saturday morning to come and see this webinar. We're going to offer you our 7 Secrets of Money Management course. All right. What you saw was just one of the different ways to apply money management within the course. Because remember, exits are a part of money management, as I just shared with you. It's just not so much about getting out with a profit. You can determine how you want to exit. You can take a little bit off the table. You can get out of everything. You can control your risk-reward ratio. This is all part of managing your trade. That is extremely, extremely important. You know, most people come to the point where they say, well, Steve, isn't it all important about the strategy and where you enter? I would say that's probably 30%. I would say the majority of it is managing the trade, managing your exit, managing your stop placement, managing all these things, managing how many shares to trade. This is extremely important. This all comes into play in the money management course. Why? Because money management matters. Now, on top of that, everything you've seen here today and everything we talk about in the course is applied on our platform. So this makes it so much more simpler to actually learn how to apply. Remember, as your mentor, we want to teach you so that you can make your own decisions. The PTS Primo Charting platform makes it simple. It's like having your own personal educator right there alongside of you to, to actually learn these things, and you can check your work. Let me share with you what else is included in this. You're going to get our proprietary RPS method calculator. This automatically decides for you, with great money management principles, how many shares you should be trading. So many students of mine, when they come to trading, they say, well, Steve, I have a strategy. It's okay, but I can't seem to get out of this breaking even. Well, many times it's because of the shares, the amount of shares you're trading. This will formulate how many shares to the exact amount you should be trading according to your capital size. Okay, it's a great, great tool. It's on the platform right now. We'll also share with you our enhanced buy-sell line feature. This is our proprietary way, 4 different ways of looking at the overall trend. We also have a strength of trend tool. This is begin rave reviews on our webinars, because I talk about this a lot of times on our Saturday webinars, how this tool automatically will share with you if whatever market time frame, whatever you're looking at is a nice trend is running out of steam or not, if there's still more momentum left, or if it's running out of gas. This is a tool I developed with Pro Trader Strategies. It's only available on our platform. You also get a signal scanner. You can scan for all these signals. You can scan for these range extensions. It's a great, great feature on our platform as well. This also comes with over 90 of the most prominent technical indicators if you like to experiment with different tools. Also, as you saw today, the auto-generated exit levels. It's all right there, one click away. And lastly, personalized tech support. If you have any issues, you can't get a chart loaded, or you don't understand some of the features, the tech support will be there in a matter of moments just to resolve the issue for you. Now, this is all included on our platform. Well, guess what? We're going to throw in 6 months free of this platform. So with this money management course, you're also going to get 6 months free. If you're not a student already of our platform, you don't already have it, this is a great, great additional feature for you. So let's break this down. Our money management course, this is our 7 Secrets of Money Management course. You get all these things included, more. Also, access to my personal email. You can ask me questions whenever you'd like. Now, if you purchased all these things individually, along with 6 months of our platform, it would cost you close to $5,000. We have a great discount for all of you today. We're only going to charge you, for a limited time only though, our Saturday morning discount of $297. That's for less than $300. You're saving over $4,600. That's at a tremendous, tremendous discount, but it's for a limited time only, today only, roughly about 24 hours. I'm sure Pro Trader Strategies, who handles all of the discounting and pricing, would wait until Monday morning, because we realize over the weekend some of you have to make a decision and you want to watch the video. But I'm sure if you're interested, for less than $300 to get all this information, this would really, really help your trading. In fact, you owe it to yourself to take your trading to the next level. You owe it to yourself to finally become that consistent trader you've wanted to be. Remember, students who have taken this course and any of our other courses email us back with testimonials saying, Steve, for the very first time, I've become a consistent trader. I feel confident to pull the trigger now, where I've spent thousands and thousands of dollars before on those other courses, and they didn't, give me any results. Sure, maybe every once in a while I have a good winner, but then I'd give it all back. But consistency is the name of the game, because consistency is what will sustain you. A two-step forward, one-step back approach. So take advantage of this. Be in charge of your own destiny. Here's how to do it. Contact Pro Trader Strategies. They're in charge of all the tech support. They're in charge of all the pricing. You can call them directly if you have any questions concerning the pricing or the platform at 310-598-6677. Now, that link you see at the very bottom will take you to the information page on the 7 Secrets of Money Management special. But it's not a live link. We have a live link just posted right now in the chat box on the far right-hand corner of the GoToWebinar column. So if you want to go to that page, all you have to do is click on that live link in the far right-hand corner, and you'll see it appear right there, okay? Now, I said I would leave the last portion for questions. So if you have any questions, now's the time to write them in. Just simply go to the question and answer portion of the platform, and you'll be able to type in any questions you may have. Someone wrote in, I think you probably wrote this in before I showed those last examples, but can you apply this to other markets and other time frames? And yes, I think if you watch this again on the recording, you'll see that I just gave examples of this on the 15-minute chart of the E-mini, as well as I gave an example on a weekly chart of the futures. So let's say you trade intraday stocks, all right? You can still apply this. Let's say you trade weekly charts of stocks. It doesn't matter. As we always say, our methods and techniques can be applied to any market and any time frame. So many students have told us in the past, they said, well, Steve, I spent like $10,000, $20,000 on this other method, and it only worked for this one market or this specific time frame. I mean, that's ridiculous. If something works, it should work for all markets and all time frames. I would say roughly about 90% of our methods and techniques can be transferred onto any market or time frame. That's when you know it's really universal. That's when you know it really works. So that's what you should be looking for, and this works perfectly with any market and any time frame. Someone said, Steve, what if I want to use my own platform like TradeStation? Can I apply this? No, there's really, we do that with strategies. For example, let's say strategy number 4, one of our most popular methods. If you want to use your platform, let's say, or NinjaTrader or Metastock or MT4 or even Thinkorswim, we give you the add-ons so that you'll see the automatic up and down arrow, so you know that. But all these proprietary things in our money management course are only available on our platform. In other words, the one-click access. Sure, we teach you what they're based off of. So if you want to use them with TradeStation, sure, you can draw in the lines and do the calculations on a notepad or for in your head if you want to, but you won't see them displayed there. We don't have that. You're only going to see them displayed on our platform. That's why Pro Trader Strategies and myself decided to throw in 6 months of the free platform so you can see how simple it is. I mean, as an educator, you want to check your work. So you want to see what it is. That's why we developed and designed the platform so that you could learn through our courses, through the online courses, what you are actually using and applying to your trading, and then you could see for yourself if you're correct or not by clicking on and saying, well, gosh, I got it right. That's where the exit level should be, and I got it right, or that's where the entry should be, or that's the amount of shares I should have. We teach you all of this in our course, but you have to have the PTS Primo Charting platform. And the good news is we're throwing in 6 months free along with the 7 Secrets of Money Management for less than $300. So remember, take your trading to the next level and invest in yourself. You've invested in all these other, so-called webinars or so-called systems that are supposed to help you. So many of our students told us they've wasted thousands of dollars on stuff that just doesn't work. I think we can all afford less than $300 to really invest in ourselves. This is a great opportunity to take your trading to the next level. And as I said before, so many students of ours have never even focused on money management. Many of them don't even think about where to protect themselves if they're wrong. We give you in this course upwards of 6 or 7 different stop placements, 6 or 7 different exit levels, and different ways in which to manage your trade. So this is a great, great course. Take advantage of it by contacting Pro Trader Strategies. You can either email them, you can call them directly at 310-598-6677 if you want to purchase over the phone, or you can go to the sign-up page on the link below. Remember, you'll get this recording today. We'll send it out to all of you, but this is for a limited time, so decide very quickly because it'll go back to roughly, about $5,000 after this, again, if you purchase them separately, okay? As we conclude here, I just want to say thank you so much for taking time out of your Saturday morning, and I wish you the best of luck in trading, but most especially, I look forward to all of you becoming students of mine in the 7 Secrets of Money Management course. Have a great weekend. I'll see you next time. Bye-bye.